What's up, Bitcoin fam? Welcome back to the Bitcoin Bulletin, where we break down the news that moves the market. First up, we're talking about Bitcoin's price action after the Fed made its latest move. We saw Bitcoin dip below a crucial support level, and analysts are watching closely to see if it's headed for a retest of $105,000. This level is critical because it represents the cost basis for nearly all Bitcoin in circulation. So what happens here could set the tone for the entire market. Next, we dive deep into the world of corporate Bitcoin acquisitions. This time, it's Metaplanet Inc. making waves. They just dropped a massive amount of Bitcoin, catapulting themselves into the top tier of corporate holders. We're talking about the implications of these mega acquisitions, the risks and rewards, and how companies like Metaplanet are reshaping the very fabric of decentralization and the future of digital assets. Then, buckle up, because your retirement might be getting a serious upgrade. We've got lawmakers pushing the SEC to adopt President Trump's plan that could bring Bitcoin and other alternative assets directly into your 401k. Imagine having the freedom to diversify your retirement savings into assets you believe in, like Bitcoin. Is this the dawn of Bitcoin retirement accounts? And finally, we're looking at the big picture with Anthony Scaramucci and the institutional demand driving Bitcoin's price. Scaramucci is predicting an insane surge to $200,000 by year-end, thanks to giants like BlackRock and Fidelity. But what about the grassroots movements and the potential risks of this institutional takeover? We break it all down. Don't go anywhere. Hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Bitcoin's price plummets past key support, 105k retest looms. Bitcoin just lost a critical support level around $115,200. A price point that represents the cost basis for nearly 95% of all Bitcoin in circulation. This significant drop, occurring in the wake of a recent Fed decision, has traders and analysts on high alert, with many now eyeing a potential retest of the $105,000 mark. The loss of this foundational support could signal further downside if bulls can't reclaim this crucial territory. The market is buzzing with speculation about the implications of this price action. On-chain data highlights the importance of the $115,200 level as a psychological and financial anchor for a vast majority of Bitcoin holders. A sustained break below this could trigger significant selling pressure as those who bought near this price try to cut their losses, potentially accelerating a downward trend. The broader market sentiment, already sensitive to macroeconomic factors, is now intensely focused on whether Bitcoin can hold its ground or if a deeper correction is imminent. This price volatility is just the beginning of our market deep dive. Get ready because Metaplanet Inc. is making a massive move in the corporate Bitcoin acquisition space. Metaplanet Inc. skyrockets up corporate Bitcoin ranks with massive acquisition. Metaplanet Inc. is rewriting the playbook for corporate treasury strategies after its latest acquisition of 5,419 BTC, valued at approximately $632.53 million. This colossal purchase not only bolsters Metaplanet's holdings to a staggering 25,555 BTC, placing it among the top 5 corporate Bitcoin holders globally and ahead of bullish, but also intensifies the conversation around the concentration of Bitcoin among major players. CEO Simon Jarovich's ambitious vision for Metaplanet to secure a 1% share of Bitcoin's total supply underscores a growing trend where companies are increasingly viewing Bitcoin as a strategic hedge against inflation and a robust store of value. This strategic accumulation by corporations like Metaplanet has profound implications. On one hand, it can lead to enhanced yield performance, as Metaplanet has reportedly seen this year, and bolster network liquidity. However, it also concentrates significant power within a few entities, potentially impacting market dynamics, liquidity, and price discovery, which runs counter to Bitcoin's core ethos of decentralization. The risks are substantial, including market manipulation concerns and the permanent loss of assets due to security lapses or regulatory shifts. This corporate embrace of Bitcoin is also influencing innovative financial solutions, such as crypto payroll services like Bitwage, which enable companies to pay employees in Bitcoin, offering a hedge against inflation and reducing transaction costs, particularly for SMEs. As corporations continue to navigate the complex landscape of Bitcoin treasury management, balancing the allure of significant financial gains with the inherent risks of volatility and centralization will be key to shaping a resilient financial ecosystem. But what if your retirement account could hold Bitcoin? Lawmakers are pushing the SEC to make it a reality. Lawmakers urge SEC to greenlight Trump's 401k crypto plan, igniting retirement debate. A powerful coalition of House Republicans is pushing the Securities and Exchange Commission, SEC, to rapidly implement President Trump's executive order, which could unlock Bitcoin and other alternative assets for millions of Americans within their 401k retirement accounts. Executive Order 14,330, signed earlier this month, directs the SEC and the Department of Labor to update regulations, enabling retirement savers to diversify beyond traditional stocks and bonds into assets that fiduciaries deem appropriate. This policy shift signifies a potential democratization of investing, allowing everyday savers the freedom to allocate a portion of their retirement funds into assets like Bitcoin, which many believe will outpace inflation and preserve purchasing power over the long term. For decades, Americans have been largely confined to fiat-denominated assets, which inherently lose value over time. Opening 401k to Bitcoin would offer a direct path to owning a scarce, non-sovereign asset for long-term wealth preservation. Lawmakers, including French Hill and Ann Wagner, are urging SEC Chair Paul Atkins to revise current guidance that restricts approximately 90 million Americans from accessing such alternative assets, highlighting bipartisan support for modernizing investment opportunities. The potential impact of this executive order could be monumental for Bitcoin adoption in the U.S., while alternative assets can encompass various investments. The order specifically creates a pathway for Bitcoin exposure within tax-advantaged retirement plans. This move aligns with growing sentiments, championed by figures like Rep. Warren Davidson, that Bitcoin serves as a crucial hedge against monetary debasement. The SEC chair's upcoming appearance on Fox Business is highly anticipated, as it may offer further clarity on the order's implications for the future of retirement savings. Your 401k could soon be crypto-powered, but what's fueling Bitcoin's rocket ship to the moon? Anthony Scaramucci has a bold prediction, and institutional giants are taking notice. Scaramucci predicts 200k Bitcoin by year-end, amidst surging institutional demand. Anthony Scaramucci, the founder of Skybridge Capital, is making waves with his bold prediction that Bitcoin could skyrocket to $200,000 by the end of 2025. This optimistic forecast isn't born from speculation alone. It's heavily influenced by the increasing engagement of institutional heavyweights like BlackRock and Fidelity, signaling a fundamental shift in how major financial players view and invest in the cryptocurrency market. Scaramucci asserts that the demand for Bitcoin is significantly outpacing its supply, a crucial dynamic that could indeed drive prices to unprecedented levels. We still maintain our price target of $180,000 $200,000 for Bitcoin by year-end, Scaramucci stated, emphasizing the overwhelming demand relative to the available supply. While institutions are pouring capital into Bitcoin, grassroots movements are simultaneously fostering a decentralized ecosystem through community engagement, fundraising, and governance, offering a contrasting approach to the centralized strategies of large investors. These grassroots initiatives leverage blockchain's transparency for accountability and promote decentralized adoption through local meetups and educational programs. The regulatory landscape plays a pivotal role in this dynamic. Clear regulations, such as the SEC recognizing Bitcoin as a commodity and approving spot Bitcoin ETFs, provide market stability and boost investor confidence, encouraging large-scale capital allocation. However, This clarity can also present compliance challenges and higher costs for smaller crypto enterprises, potentially creating an uneven playing field. The concentration of Bitcoin ownership among institutions and long-term holders reduces available supply, which, combined with factors like futures-based ETFs and exchange liquidity risks, can heighten price volatility. Startups are advised to balance institutional trends with grassroots adoption, integrate crypto into their treasury management, and focus on user-friendly features to thrive in this evolving market. That's all the news for today, but stick around for a quick recap and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin face a critical support test after the Fed's latest move, Metaplanet Inc. Made massive waves with a huge Bitcoin acquisition. Lawmakers are pushing to get Bitcoin into your 105k, and Anthony Scaramucci is predicting Bitcoin could hit $200,000, fueled by institutional demand. Don't miss out on the future of finance. If you found this video valuable, smash that like button, subscribe to Bitcoin Bulletin for more market insights, and hit that notification bell so you're always the first to know. Follow us on all social media platforms for real-time updates. See you next time.